When us investors reach our 50s and beyond, something interesting often happens. Our investments they become more complicated. We have more accounts, we have more funds, we have more investment strategies going on. We also get more advice. But in many cases, after 50, simpler investment strategies, they often just work better. Hi, I'm Scott Mullet. Oh, thanks, but no more. This is The Wise Lane, where we focus on money, mindset, and modern living for the over 50 crowd. 50, yeah, that's us. We're over 50. Look at us. It's our birthday. Over 50. Sorry, a little carried away. It's actually not a birthday that I know of. But I'm excited because we're still in the middle of our series on investing over the age of 50. And we've been talking about how investing changes in the second half of life in the past few episodes. So our first discussion was episode 17 of The Wise Lane, where we talked about the mindset shift that should happen after 50. In episode 18, we looked at some of the mistakes older investors make. And in episode 19, we explored how much risk you should really take. So today, we're going to talk about something that may feel a little counterintuitive. Counterclockwise, counterintuitive. Anyway, this is why many successful investors over 50 have simplified their portfolios rather than complicate them. And it's not because simplicity is easy, but it does take away the biggest risk of all, which is, drum roll, our own human behavior. So the risk is us. So first, let's talk about why complexity increases with age as we invest. Because normally as we grow older, we also grow wealthier. And it seems like just basic evolution that as wealth grows, complexity tends to grow with it. We have more financial accounts, whether they be bank accounts, brokerage accounts, retirement accounts, other accounts, this account, that account, woo. We also have more investment products we may invest in. Maybe it's hedge funds or private credit, rental properties, real estate funds, annuities, more. We have many more strategies that are designed to optimize our performance. Sometimes that complexity might come from financial advisors. Sometimes it comes from years of accumulated decisions and knowledge and experience that we each gain. Sometimes it comes from our own research. Maybe it's books, lots of books, magazines, newspapers, podcasts, YouTube channels. There is no shortage on investment opinions out there at all. And that would include, I guess, this particular highly watched YouTube channel. Wink, wink, wink. Yeah, there's not a lot watching The Wise Lane right now, but maybe they will. Complexity can also create this hidden problem because it becomes harder to understand what you actually own with more complexity. And when people don't fully understand their investments, they tend to make more emotional decisions. I know I do. Sometimes complexity can create more opportunities for mistakes than simplicity. The more moving parts a portfolio has, the more opportunities there are for errors. You have overlapping funds, duplicate investments, unnecessary fees, unintended concentration in certain sectors of the market, which might mean the portfolio doesn't react the way you think it might, given various market conditions. There's also your own need for liquidity or cash flow, which may be misunderstood with complexity. Complexity can also create unintended tax scenarios that may or may not go your way. Complex portfolios can also make it harder to rebalance everything or to make adjustments when life circumstances change. In many cases, complexity really doesn't improve performance. Sometimes it does, but not all the time. It will increase the number of decisions that it requires of you. So why does simplicity become more powerful for investors over 50? Well, as we've discussed in the past 3 episodes of The Wise Lane, as we age and near or live in our retirement, the goal of investing begins to shift. It's no longer just about maximizing returns or beating the market, although I love to beat the market. But it is about creating a structure you can manage confidently for decades. Simple portfolios offer several advantages. They're easier to understand, they're easier to maintain, and they're easier to stick with during periods of market volatility. Simplicity reduces the chance that we're going to react emotionally when markets move. So here's what simplicity can look like. Now, pay attention here, because going simpler doesn't mean ignoring investment diversification. It's important because this is not what I'm saying. So going simpler, again, does not mean ignoring diversification. What it does mean is focusing on some essentials, like make sure that you have broad diversification. Make sure that there's a clear asset allocation. Make sure and focus on low costs in your investments, as well as costs to your financial advisors if you have them, because every added fee eats away. It eats away at your overall portfolio growth. It's also important to have transparency so you can understand the portfolio structure. Many very successful investors use portfolios that can be explained in just 2 or 3 sentences. This is the elevator speech. You're sitting in the elevator, you can explain your whole portfolio in a couple sentences. Because when your strategy is clear, your decisions become easier. And here's an additional side benefit to simplicity, because it's not just efficiency, it's primarily confidence. When you understand your portfolio, you're less likely to panic during downturns. I know that's for me. We are less likely to chase trends, and we're more likely to stay consistent over time, just like the wise lane. All right, now we've come to the part of wrapping up and tying with the bow. After 50, investing doesn't need to become more complicated. In many cases, the wiser path is the opposite: clarity, focus, and simplicity. Because the best investment strategy is one that we can understand and that we can live with. In the next episode, which will be Wise Lane episode 21, we're going to talk about why a crash in the market hurts more as we age and as we get near or are already in retirement, especially when our investments are supporting our lifestyle. If you found any of these investment discussions helpful, please comment below, and please like and subscribe. This is The Wise Lane, focusing on money, mindset, and modern living for you. I'm Scott Mullet. Thanks for watching.